Good morning, everyone. This is John Thomas, the Mad Hedge Fund Trader, with you um, for our bi-weekly strategy webinar for September 17th, 2025. Boy, how the years have gone past. Let's play from start. Okay, today we're going to talk about the greater fools are watching, and that is reference to an old Japanese proverb about the stock market, which in completion says, while the fools may be dancing, it's the greater fools who are watching. And that is the case these days. But we may get a resolution to this at 2 o'clock Eastern when the Fed makes its very long awaited decision on interest rates. Go ahead and type your first name and where you're from. I see Malcolm in Tasmania is in early. We got Matt from Columbus, Ohio. We have Joseph from Atlanta, Georgia. We have, uh, let's see, we have Jean-Jacques from somewhere, and the names are coming in too fast to read right now. Lawrence from Rockville, Maryland. John from Minnesota. Another person from Atlanta, Felipe from Colombia. We have Drew in Colorado, and Jean-Jacques is from Poland. And we have one more, Mark from Idaho. So let's get on with the show here. There's really nothing to do until the Fed makes its decision. The market's just going to sit here and levitate, although the Dow is up 300 on the day. We'll find out if it's a sell on the news, especially for the bond market. A lot of individual stocks are down, even though the indexes are up, and the S&P 500 is down small. So it's another one of those big contradictory markets. Nvidia is down $5 today on news that China is going to boycott their chips ahead of their meeting with Trump. So that's kind of a shot across the bow right there from China. And let's see where the bonds are today. Bonds are basically unchanged, sitting at 90.55, where it's been for the last several days. Okay, let's get going here. Yeah, up at Tahoe, it's in a little piece of heaven. It's always a rainbow up there. And notice this is a double rainbow. We got the main rainbow here, and this is a minor rainbow sitting over here. So yeah, you wonder why I live so far away in the mountains. That's the reason. The Mad Hedge Trader Summit replays are up. That is a gathering of 24 of the best trading minds in the world. It's a smorgasbord of trading strategies on all asset classes, including stocks, bonds, foreign exchange, commodities, precious metals, and real estate. We gave away $100,000 in free prizes, and we emailed the link to the replays to you this morning, so you can go straight there after the summit, or you can just go to madhedge.com, and that will take you to the summit website. And the next one of these is going to be in December. Trading Alert performance, again, positive every month this year, and one of the most difficult years in history. And really, we're almost up every month for 2 years. September is now at 1.65, assuming that our two positions go out at max profit. 55.23% year to date, 806 since inception. It's a performance that most traders will take all day long. 94.66% trailing 1 year return. Notice that the performance has started to flatline here as we keep taking smaller and smaller positions as the market goes higher and higher. We're still at an all-time high, but we're not making the dramatic gains that we did when the market was much cheaper in April, for example. And you can see it also here on the long-term charts. We're at an all-time high, 51.22% trailing 1 year return. Positions, I sent out trade alerts on both of these, Goldman Sachs and JP Morgan, to close them out a few pennies short of max profit, just for those who wanted to come out before the Fed decision. If you want to run these into expiration, no matter what the Fed does, I doubt that these stocks will go down more than 10%, which is what would have to happen for you to lose money on the trade. But, uh, I never miss an opportunity to take my risk down to zero at max profit. So the alerts went out. Um, and that leaves us at 1.89% for the month. Financials turned out to be a great bet this month ahead of a um, interest rate cut, first one in a year. How hard can that be? But we are in high risk times right now, and we got a monster profit to protect. Okay. Okay, global economy. We are having a jobs crash. No doubt about it. Non-farm payroll collapses in August to only 22,000, far below the 75,000 expected. But far worse were the revisions of 100,000 for previous months. On top of that, the Bureau of Labor Statistics cut 911,000 jobs from the payroll figures, meaning we have a huge negative number for the year. We're in recession as far as the job markets goes, and it's far weaker than anybody thought possible. And of course, the stock market went up to an all-time high on that news. Weekly jobless claims, a shocking 263,000, four-year high, the highest since the pandemic. Trump tariffs are ruled illegal. Of course, it'll be the Supreme Court has the final say. I think the Supreme Court has read the Constitution, which says that Congress has the sole ability to uh, levy tariffs. So or produce income. I can't remember. My Constitution is in the chart in the kitchen, so it's out of reach. I usually read it over dinner. Okay, Consumer Price Index 0.4, up 2.9% year on year, up for 5 consecutive months. Consumer sentiment comes in weak. It is a disastrous set of economic uh, data, which market people are just not looking at right now. Um, they are glass half people. They only want to hear the good news, and there's very little of that. And to make matters even worse, business is even slowing down in Las Vegas, which has seen visitors down 12% year on year, but the prices have not gone down yet because they have inflation. So here is the latest inflation data. Up four in a row here, but up 6 out of 5 since March. So it really is a nonstop rise in prices. And of course, these greatly understate the price rises that are actually happening. If you go uh, into any supermarket, almost all food categories are up huge. So uh, it's a matter of waiting for these numbers to catch up. So the big question is the Fed going to look at this set of numbers, rising inflation, or this set of numbers, which shows employment rising really for the last year consecutively, coming off a very low multi-year bottom? And of course, this is the pandemic spike, which we all remember, 15% unemployment at the end of 2019, beginning of 2020. And of course, real unemployment rate was much higher than that because these numbers don't include people working off the books, like in construction, agriculture, and restaurants. So, jobs or inflation, we find out at 2 o'clock Eastern today, 11 o'clock Pacific, where the decision of the year will be announced. So Mad Hedge Market Timing Index, hugging the neutral area has been doing now for a couple of weeks. That also underlines the indecision in the markets. Market Timing Index. I hate to say this, but boy, does this look like a Head and Shoulders top. if the market doesn't like what it hears today, you can expect a breakdown to the 20s, which would be equivalent to about a 5 or 10% correction in the market. If it does like what it hears, let's say we get like a 50 basis point cut, then we go back up to the highs just short of 80, and then we sell off after that. So you can pick your poison. Uh, Weekly jobless claims. I didn't update this, but we had the biggest rise in jobless claims in 4 years, 263,000. Uh, my adventure of the week, it has me going to the Thunderbird Lodge, which was a summer house built by the one of the richest men in the world at the time, George Whittle. Nobody outside of Lake Tahoe has heard of him, but he owned the entire east shore of Lake Tahoe, 22 miles of it, which his father, a silver baron, won in a card game. And he basically lived the playboy life. And over a period of a decade, built one of the most spectacular, or the most spectacular, Lake Tahoe house there is. So we'll get a lot more pictures of this. And let's go on to the questions. Let me see if there's any questions right here. Okay. Let's see. Is it possible for the federal government to change quarterly earnings report to semi-annual? Uh, and what would that do to the stock market? Well, this isn't going to happen because it would suck profits out of the stock market. Uh, if there's less reporting, there's less to trade on. That would reduce market volumes, reduce market volatility, or at least confine it to 2 days a year instead of four. So you can bet Wall Street's going to fight this like crazy. More disclosure brings in more investors. And you can bet that a lot of investors will ban investment on companies that report earnings only twice a year or not at all. The quarterly reporting requirement is only 55 years old. It goes back to the 1960s. Um, and back in the 19th century, companies never reported, and you had uh, an economy that constantly went bankrupt, had constant financial crisis because companies just would go bust, would look great one day and go bust the next. So and only the insiders made money at that time, which was legal back in those days. So I tend to think that's not going to happen. The long-term trend is for more disclosure, not less. Um, what is your opinion of the German economy and how do I buy European stocks? Well, there is the DAX index has an ETF which you can buy, and I'll show you the symbol in a second. Um, and uh, what's happening though is after running no deficits really for 50 years, the German economy has suddenly started borrowing big and spending big, and that is great for the stock market. And that is why foreign money has been pouring in. Of course, the other reason is that their stock market was cheap, being ignored for 20 years, 25 years, where ours was expensive. So there was a natural rotation begging to happen, and the February stock market crash was all people needed to hear. So, yeah, I like the German stock market here. If you want to pick a single company, you can buy Metal Gesellschaft, which is their main heavy weapons and steel maker. Okay, let's go. Is the AI bull market over? Well, Goldman Sachs is asking the question for sure, saying that stock prices may flatten out here or even decline. Um, Oracle soars by 23% on spectacular crowd growth forecast, making Larry Ellison the richest man in the world for a few minutes. Uh, Robinhood uh, joins the S&P 500. That's a great millennial play and volume play, and their entry was delayed because of their close association with crypto, um, which many regulators view as an invitation to trouble. Health and Human Services badmouth Tylenol, tanking the stock. Kenvue, a Johnson & Johnson spinoff. You can expect this to happen more or less every day with the Health and Human Services attacking some part of the medical establishment. And that's going to continue for 4 years, and it's looking like some childhood vaccines will get banned. Expect more diseases, more people losing their children as a result. Broadcom stores on a $10 billion chip order, the largest in history. One of the large language models is thought to be the customer. Kraft Heinz splits, separating ketchup and mustard, who've been joined for a century. And Marvel sellers dive a big AI chip maker on disappointing earnings. Okay, so let's go here. The yield on the 90-day T-bills has collapsed. It was at 4.3. It's down to 3.93 as people pour money into there to get out of the stock market, avoid the risk, but also get in before the yields drop even more on a Fed rate cut. Okay, downside targets. We've got one here. Um, we're looking at either down 4.1, down 10.2, or down 13.2, depending on the reaction to the Fed decision. We are very high right here, is all I can say. Momentum also is flatlining. That is not good for stocks. And SDS has had a multi-year all-time low, really, at 14.92. That's the short S&P 500. And that is in extreme buy territory, I might add. We've been living below the 50-day moving average since April. The VIX also starting to rise up a bit, anticipating a poor result after the Fed decision. And SVIX, the short VIX, backing off of all-time highs. Dow flattening out. Russell, new highs, which does well on falling interest rates. NASDAQ, new highs. China, new highs, and it's still going up much faster than the US. Japan, new highs. And Europe, flatlining after a prolific performance in the first half of the year. Here's the German DAX, the DAX, and there are many ETFs related to this that you can buy. And emerging markets, new all-time highs, big weak dollar winner. Okay, NVIDIA, I told you about the China news. Today it's down $5. Microsoft taking a break. Meta also flatlining now for a month. This is where Goldman Sachs gets these flatline ideas from. The stocks have been doing exactly that for a month in the Mag 7, except for Apple, which has been going up. Alphabet won their antitrust suit. Huge win for them. And we got a nice 25% move in the stock in 2 weeks. So this has been one of our favorites for a long time. Put out several reports this summer saying buy Alphabet, and boy, did that work. Amazon also approaching highs. Tesla, Elon Musk bought $1 billion worth of stock, which for him is sofa change, but it was enough to get the stock to go up 23% in a week. And we used that opportunity to put out a short, $100 out of the money. So I doubt we do another 100 on top of 100, on top of a horrific fundamental picture for the company. At this point, Tesla's only rising on belief in Elon Musk and whether he can stay out of politics or not. And with an election fast approaching, that is less and less likely. Netflix, big flat line here, getting new competition from Paramount, which was taken over by Skydance, which is making a bid for Warner and Warner Discovery Channel. And Larry Ellison is trying to make a big effort to create another streaming competitor for Netflix. Never mind that everybody else who tried this has gone bust or lost tons of money doing it, like ESPN, Disney, all the other streaming channels. Um, okay, let's see. Let me look at the questions here. Okay, we'll get to these in a second. AMD had a nice little sell-off. Salesforce still getting crushed on the is AI putting software as a service out of business, replacing it, or at the very least, replacing all its customers. Same as hitting Adobe and Snowflake, holding up well on their cybersecurity exposure. ROM at a new high at 86. MicroStrategy bounce along the bottom. I put on a long here because we're entering the fourth quarter, which is seasonally a period of strength, and it's almost the only stock in the market that's been off down 30% that has a chance of going back up again. So, and I went well in the money on this with like a 260, 270, which is 20% in the money. Oracle, monster move there, 23% in a day on spectacular AI forecasts. There's another shot at the George Whittle House. Was entirely built by prisoners who were donated by the state of Nevada. Turns out George Whittle is friends with the governor and made quite generous campaign donations. So he ended up with a house built by prison labor. Second half of the barbell, Goldman Sachs, new all-time high, and we got a max profit on this position. Morgan Stanley, the same. JP Morgan, max profit here. And again, expires in 2 days if you're not coming out right now. Bank of America, new highs for the year. The whole financial area has just been absolutely on fire. And they were all great investments. Berkshire starting to give up its recent gains. BlackRock flatlining. Metals and mining, all-time high, being dragged up by gold and silver. Boeing is flatlining now for 3 months, but delivering record aircraft deliveries. General Motors, I don't know why that's gone up, because they've gotten no relief on the trade front. That is for sure. And this one, I did figure out why it's crashed. A big part of the overnight delivery business was the de minimis exemption business they got flying packages from China to the US. Until now, packages below $800 were duty free because the cost of processing the duty was more than the money they would take in. And that opened up a floodgate of shipments from Temu and other Chinese commerce companies. That ended a couple months ago, and look what happened to the stock price, 105 down to 80. So that is not coming back anytime soon either. So I think the package delivery companies are out of business for the time being. We'll just have to watch them bounce along the bottom for the long term. Same is true for FedEx, same is true for DHL. Caterpillar, new highs here. Deere selling off. Freeport Looks like it's about to break out to new highs. Notice there was a big $5 billion copper takeover last week. You always want to follow the big money. And Walt Disney going nowhere now for 3 months. Industrials flatlining because all the money is moving into AI, period, end of story. Um, Union Pacific selling off on their takeover of Norfolk Southern. Walmart trying to make a run at new highs, although tariffs have been a drag on them really all year. Costco, same tariff problems, eating into profits. Delta benefiting for a big surge in ticket prices that started this summer. So it hit a new high. Transport's also doing well. And healthcare, rare rally off the bottom. Don't expect it to last. We are a tweet away from another attack on the industry from the De Department of Health and Human Services. Amgen selling off again. Visa worries about crypto replacement, holding it back. Of course, Visa can process crypto like anybody else, but for a lot smaller fees. I mean, that is the whole point of crypto is to reduce the fees from 3%, which Visa charges, to 0.03% or nothing at all. Consumer discretionary, new high for the year. And this is a view off the point at Thunderbird Lodge. You can see this massive thunderstorm is coming in from the north. Okay, let's go to the questions now and see what we've got. Well, John is asking, uh, what is the outlook for the Treasury market with massive Fed borrowing about to hit? In fact, reliable sources tell me that 6 trillion is due for rollover next year. Ironically, money that Trump borrowed during his last administration, and that has to be refinanced at much higher interest rates. You go from 3 to 6, um, on top of the 5 trillion that got borrowed as a result of the new budget bill this year. So you really could get a massive crowding out of private borrowers and higher interest rates at the long end. And that has been happening with the steepening of the yield curve, where, the Fed can lower uh, short-term rates as much as they want, but the market is in control of long-term rates. And if there are no buyers, long-term rates go up. That is one thing that has the bond market thinking that the end of the world is at hand. I mean, you talk to bond traders and they think conditions are terrible. So, um, and let's see what else we have here. Da, 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 da. Okay, so I mentioned the steepening U.S. yield curve. U.S. Treasury, a crucial barometer of how the economy is doing, has been worried about mounting public debt, attacks on the Fed, and tariff policies. Shift has direct implications for banks' net interest income. It also shapes their lending decisions since banks borrow short term and lend long term, relying on the spread between the two profits. Bad news for the economy and the stock market is coming. We just don't know when. So I am avoiding TLT to answer your question, Jose, because that is a 10 to 20 year long bond play. And we could get this divergence where short rates go down, long rates go up. And most of the country, including real estate, is totally dependent on long rates. So uh, the renaissance in the real estate market, which is now underway, could suddenly grind to a halt. So here's the TLT here. Had that big pop on the disastrous jobs figures. assuring us that we're in recession. And normally bonds rally on recession. So expecting interest rate cuts. We'll see if this time it's different. Uh, TNX down to 4.02 from 460. That is a big decline in interest rates. And you might argue that any positive news from the bond market, from any interest rate cuts, are already baked in the price. I mean, this is essentially discounting a half point rate cut that's already happened. Junk bonds just continuously going up as credit quality improves, down to a 5.48% yield. We were buying this last year when it was at 8. And muni bonds, big rally there on falling rates. Emerging market debt, new highs for the year. That's mostly a currency play now. And the TBT is selling off hard. That is the short treasury ETF. Annaly Capital, new highs again. And that is the front door of Thunderbird Lodge, where a procession of sports figures and movie stars used to enter. George Whittle ran away and joined a circus when he was young. Excuse me, and used to keep lions at his Thunderbird Lodge, and rhinoceri and elephants and giraffes. But he had to take the lions home back to San Francisco because they all got altitude sickness. You know, the lions don't live at 6,000 feet, which is where Thunderbird Lodge is. Okay, so back to questions here. Um, will the large pharmaceutical companies be down for the next 4 years? Uh, my bet is 3 years or even 2.5, because a year before the election, all of the industries that suffered from the current administration, like pharmaceuticals, should start to rally as people take advantage of cheap prices. Okay, and another question here. Um, do you like copper companies like Freeport-McMoRan? I absolutely love Freeport-McMoRan. I loved it enough to go visit a copper mine a couple of months ago to get a firsthand look at the industry. And we are on the verge of a copper boom due to the fact that the US grid has to triple in size just to accommodate current AI demands. So buy copper, buy gold, buy silver. All the hard assets are doing really well. And by the way, they're also weak dollar plays. Another reason to buy all the hard assets. Okay, so let me try and take one more question here. Um, with the Fed on the verge of cutting rates, does this guarantee we are in for a higher S&P by the end of the year? And I think we are, especially if they do a continuous rate cycle, that will keep sucking in the buyers. Um, uh, But at some point, the markets will get so overbought they have to sell off. So uh, that is what we are trading against, is a known top in the market. We just don't know when it is. Certainly on valuations measures, we're already at the top, but nobody's looking at valuations anymore, just liquidity. And liquidity is at record highs with the government pumping a record $5 trillion into the stock market through all of their various tax subsidies. Okay, currencies have stalled ahead of the Fed move like everyone else. Australian dollar's been on a tear because of an improving China economy. May see another 20% move down in the dollar as the Fed starts actually cutting, as opposed to just thinking of cutting. Um, And more dollar weakness will come with evidence of a recession, which means that the Fed has to cut interest rates more. Whenever you cut the interest rates on a currency, you slaughter it. So buy all of the foreign currency plays. So here's Aussie dollar, just took off like a rocket. We got about a 5% move here in 2 weeks. Uh, Japan looks like it's getting ready to break out on the Fed news. Euro already did break out, expecting new highs for the year against the dollar, which we've been predicting all year. Same with the British pound, almost new highs for the year. Those European vacations are getting more expensive. And emerging markets are at new highs for the year, expecting a weaker dollar still. If you want to know what the kitchen looked like when I was a kid, this is it. Of course, this is the kitchen in George Whittle's house from the 1930s. And these were state-of-the-art appliances in 1935. You know, gas oven here, um, refrigerator here, Frigidaire, they were called then, hand scale, and so on. So they really did a nice job restoring this. Okay, let's go to more questions here. Um, do, um, is gold overbought at this point, or do we go higher? We go a lot higher in gold because interest rate cuts in the U.S. Um, translate immediately into higher gold, silver, and copper prices. And we only will just start interest rate cuts today, maybe. If the Fed doesn't cut today, you can expect stocks to sell off 5 or 10%. So, yeah, I'm looking for 5,000, but forecasts of 10,000, 20,000, 50,000 are out there, just like there are forecasts for Bitcoin of 1 million. So pick a number and multiply by 10, and that's your upside target. Okay, oil jumped 2% on the Ukrainian drone attack, which took place right here on the Baltic Sea, just south of Petersburg, a place that I visited many times during the Cold War. And Russia is just a big fat target. These sites can't be defended. You can't defend against a supersonic drone or missile hitting an oil refinery. They're almost impossible to defend, and in fact, Russian experts have started to fall dramatically. Uh, so suspension of oil loadings there completely overnight, and that was Russia's largest export terminal. Money is starting to return to the energy sector, however, because it is so cheap, along with healthcare, it is sitting on a bottom and really hasn't moved all year. Nuclear plays are still hot, but overbought like the rest of tech. So there's oil sitting on the bottom still. Here's the USO, Energy Select going nowhere. Exxon trending sideways, Occidental trending sideways, Nat Gas new lows for the year. Cameco flatlining at the top, waiting for another breakout. Tried to do that yesterday. And Vistra, same thing, trying to break out, but is run into a wall of selling. Of course, who does the richest man on Lake Tahoe with the largest house have? He has the largest yacht on the lake also, and this is a custom-made uh, wooden boat that he kept in the garage. And for engine power, he used two Allison engines out of a P-51 Mustang. He had to keep the boat hidden during World War II in this uh, place because he didn't want the Army to come repossess his Allison engines. Uh, and you can rent this boat today, which has been beautifully restored with private money, for a mere $10,000 an hour. They rent it all the time for weddings and hedge fund meetings, as it turns out. Okay, precious metals. Boy, it just can't look any better. We hit the 1980 inflation adjusted high. Uh, of 3,674. Um, Gold has hit a new all-time high 30 times so far this year. Uh, Spot price of gold topped its inflation-adjusted peak. Uh, and 1980, it hit a high of 850, where I sold all of my gold coins, and it basically did nothing for decades after that. Again, it's lowering interest rates, tax on the Fed, weak dollar, all the reasons to buy gold. So here is a major breakout on gold, 10% right there. A GDX, even more. Barrick Mining, huge move, 21 up to 30. That's a 50% move in Barrick Gold since the beginning of the year. Anybody who bought the gold leaps that I put out, or the Barrick gold leaps that I put out last year, is sitting at max profit now. Newmont Mining, the same. Huge gains there. Silver also absolutely on fire, well on the way to my target of 50 cents. And silver miners on fire. This really has been the best performing sector in the market after the Magnificent Seven. Wheat and precious metals, 107. Can't believe this. This was like 40 when we first recommended it about 10 years ago. Platinum is flatlining, and that's the rear view or the stern view. I should get my nautical terms right here of the boat. And I can't remember the name of it. That's the name of it, but I can't read it. Anyway, beautiful boat. Great to see it. And this is the first time I've ever seen it. Previous times, when I visited Thunderbird Lodge, this thing was all locked up under restoration or awaiting funding. Okay, let's go to more questions here. What is the end game with unemployment? And if the worst case scenario of AI taking all jobs happens, how will the stock market go up if nobody has a job? Well, very good point. Um, Mostly uh, the AI job losses are affecting only entry-level people who can't get jobs at all, or the lower-level people in companies, and those people are being replaced by other people from India. Um, if you look at the author of your recent research piece, it often will have a name from India, and virtually all publications are moving their actual writing to India, where they get AI apps to actually write the stories. They just put in a few keywords and a story pops out. So much of what you're reading now is probably written by AI. Uh, but also, you can count on the unemployment rate rising every month, probably for another year or more. And at some point, that will affect the economy and will affect the stock market. It's hard to see um, stocks going up with a 6 or 7% unemployment rate and a shrinking economy, although that's what's happening right now. Um, Liquidity conquers all. Okay, green shoots in the real estate market. Uh, Suddenly, the weekend open houses have turned into stampedes. Mortgage demand is at a 3-year high, interest rates at a 3-year low at 6.1% for the 30-year. Sharp drop in mortgage interest rates finally got some home buyers off the fence. Also helps the current homeowners are saving money on their payments if they have floating rate loans. Total mortgage applications jumped 9.2% last week. Pending home sales down 0.4 and just up 7% year on year. Housing is seeing first year-on-year price falls in many years. Some 1.55 million homes are for sale. Median home price now 422,000, up 0.2% year on year. First-time buyers, 28% of the market. All cash buyers at a record high of 31%. Here is the S&P Case-Shiller up 2.7% year on year. And Crown Castle International crushed. And so there is a great yield play there and a potential double bottom. And I may even do a leap on this on top of the leap I put out several years ago. And U.S. Home Construction Index, been on a tear since June. We've been recommending DHI all along. And there's DHI just coming off of a new high for the year. That's me inside the richest man in the world's house, looking at that lake view. Of course, you hike 5 miles a day every day for an entire month, you lose weight. I think I lost 10 pounds last month. Okay, so what do we do about all this? Well, stocks buy the interest rate sensitives. No shock there. Bonds sell rallies, commodities buy dips, currencies buy dips, precious metals buy dips, energy stand aside, dead market. Volatility sell over 30. You might start thinking about buying at 14. And real estate stand aside. Okay, so this is me with one of my old friends, Mark Twain, um, at the Thunderbird House, and I listened to an hour of his recitations, which was very entertaining, and that's me with an old high school Letterman's jacket. Next webinar, October 1st, in 2 weeks, from Incline Village, Nevada. Let's see if there's any more questions here, and let's take a look. Will Bitcoin rise with lower interest rates, and if so, by how much? Bitcoin will rise because it has less yield competition. Bitcoin, of course, yields zero. So the answer is yes. And I think we go back to the old high. That's a natural target for the trend followers. So there may be a nice 10% move here in Bitcoin and a 30 or 40% rise in MSTR, where we put out a long yesterday, a long call spread. And let's see if there's any other questions. Okay, well, that should do it for today. This is John Thomas, the Mad Hedge Fund Trader, signing off today with yet another Lake Tahoe sunset from the Thunderbird Lodge. Good luck and good trading.